Hey Cryptoverse, let's take a look at the latest article on Brave New Coin, Decred. So Decred has a hybrid proof of work, proof of stake consensus mechanism. It's got a treasury for the development. Its treasury wallet is basically untouched. They're not going to go bankrupt anytime soon. There's going to be plenty of funds for development a long way down the line. They have a government system in place where you can vote on proposals, you can submit proposals. So a lot of people really like Decred's style of combined governance, treasury, proof of work, proof of stake. It's kind of like attempting to capture the best of all possibilities here. A lot of Bitcoiners are into the Decred model. One thing to know is that Decred did have a pre-mine, so it's something to keep in mind. It certainly has that flaw despite all its positive qualities. So if we compare DCR to its closest relative, Dash is kind of absorbing all the metrics here. Now, similar to DCR, Dash has a coin shuffle or coin join privacy thing. So that's going to elevate all of the transaction per day metrics. Fees are actually substantially higher on Dash as far as what they collect, and active addresses are higher. The one thing that DCR has on Dash is GitHub commits. Now, if we look at ticket prices, which is basically a way to enter the POS system for Decred, they had been rising, and they're just subject to supply and demand of the tickets themselves, not the price of Decred. So you can see they've kind of come back to reality a little bit as far as the ease of entry for proof of stake. I think that's good. I think it shows that there was clearly a speculative top put in here, and it's relatively going sideways into where it has been for the previous year. Mining difficulty also sort of plateaued or peaked, mainly because ASICs kind of stopped getting released for the Blake algorithm. This is also good. I think it shows that there's some decentralization here as far as ASICs versus proof of stake. 22% of the network is also just individual miners, so there's not really a mining pool issue here. Looking at transactions and average transaction values, you can see the transactions on this network have kind of been all over the place historically. But if you draw a rate of change line or a trend line here, it's clearly been descending since 2017. And the fill is the average transaction values. That's been declining as well, with a few random spikes here and there, but overall, there's nothing really that I can glean here that's particularly bullish or particularly bearish. Obviously, it's better if you see transactions per day increasing over time instead of decreasing over time. But there's a lot of variables here with the hybrid proof of work, proof of stake. There's mining rewards, there's proof of stake rewards. So it's pretty clear that in general, this network isn't just being used as like a transaction mechanism, because if it was, these values would be increasing regardless. At the very minimum, there's an inflationary aspect to transactions per day because of the mining rewards and the proof of stake rewards and all that stuff. So like there's a lot of coin moving around. So in general, this should remain flat over time. And if anyone was using it at all, it would be increasing. Looking at NVT and active addresses. Now NVT is an inverse metric of economic utility. So you can see since June, it's just been straight down, largely because of the coin join, coin shuffle thing that they enabled for privacy in August 2019. So you can see as active addresses shot up, NVT went down, and NVT is sort of perking up a little bit, but historically it's certainly at the lows. It's around 71, and active addresses at all-time highs, but it's hard to compare the current system to the previous system, which didn't have this coin join, coin shuffle stuff. So these addresses are active because of participation in the coin shuffle mechanism, as far as I can tell. So it's hard to just compare the two periods to each other. All right, looking at some TA, I have the 50 and the 200 EMA here, and the volume profile of the visible range on the side here, an oscillator, RSI. My favorite, which I use to look for extremes, highs or lows, or bullish divergences, bearish divergences, that sort of thing. So first thing that pops out to me, obviously, is historically the volume on Polo has happened, basically sub $3 has been most of the volume. Part of this is a Poloniex thing versus other exchange thing, because over time the volume on Poloniex in general has dropped off, but there's clearly a lot of people who got in, or a lot of trading activity at that level. So if we kind of ignore that because we're not, sub 10 bucks, we're at 20 bucks here. If we were to break 12, then we'd be in trouble based on historically where price action is. So if it breaks 12, it's probably going to 550, and if it breaks 550, it's going to sub 3, easy. But as of right now, it looks like it's building this V and a U. We'll see this on the BTC pair as well. It's ramping up for a 5200 bullish cross, and you can see the previous cross didn't really go anywhere. There wasn't really any bullish momentum or bullish follow through. So it's technically just continued this bear trend since 2018, and it hasn't really gotten any steam here. You can make a case for an inverted cup and handle. Again, if it breaks that 12 level, it's definitely going lower, much lower. So watch for that. It's a pretty strong support at 15, so there's plenty of reasons not to drop here. And I'd be watching for that golden cross. Looking at the cloud, it's above the cloud. Everything's bullish on the cloud. Only the second time since mid-2018. It had that chance here. It didn't go anywhere. You can see this Adam and Eve even better here. You can see also it sort of got denied at the resistance level, but that doesn't mean it's dead in the water just yet. I'd put any, pattern canceling levels basically below the Eve, below this U, at like 15 bucks. If it breaks 15, then it's in trouble. At the very least, it could be setting up for an ascending triangle. So Adam and Eve's can morph into ascending triangles, but even had an Adam and Eve here, it sort of pulled back. So there's plenty of reasons to remain bullish on this, but as far as entering a long position, personally, I would wait till we're above 24 buckaroonies. And on the BTC chart, very similar Adam Eve, setting up for that 5200 and a bullish Kumo cloud setup. This would be the first bullish 5200 again since mid 2018. First time it's been above the cloud since early 2018. There's a massive volume node here. Historically, if we go back, there's a lot of volume, resistance, support. Now it's resistance. It's got to get above 003, basically, to have a shot at any bullishness. And I don't really see any bullish or bearish divergences here, but putting an alert on 003 is definitely what I would be doing for Decred.